Okay, friends. So U.UN monthly chart. Let's take a look at the lifetime of it again. We've looked at this a lot of times, but here's the deal. We you see this 19 area. It broke out. We had that breakout there, and it was really turned out to be a fake out. So breakout into a fake out. So let's just zoom in a little bit. We're still on the monthly chart here. Our line in the sand at the moment. Let's mark this. Is there. Let me put my magnet on, get it accurate so we know our number. All right, so 1222 is our number. Um, yeah, this is slightly problematic. This was okay. This monthly consolidation here, it did make an undercut, but it got right out of there. But we've convincingly set a lower high on the monthly here, and we can tell that because we broke down over below this low. So it's going to be searching for another spot to bounce off of. We're looking at our volume profile, and we are still in a demand zone. If it breaks down out of this shelf, you've got this big old air pocket. So it doesn't, these things don't dictate price, but they do give us a heads up that maybe we should just be keeping a closer eye on things. So this is what I'm looking at. And, look, it got into that air pocket, but it bounced right out of there, right? So, does it mean that it breaks down this on this volume profile and then it just drops all the way down to let's say $11 or 11.50, 11.25? Hey, listen, who knows? But the price action at the moment is problematic. So you have a little bit of a double bottom right here, and that's what we're watching right now. So this key level for us right now is really, and it took it out, but it just it held, right? So it's just a slight undercut. So this is the spot right now that we're looking at. And if it breaks down, then we're going to start to be looking in this area to see how these support areas react. We do have things in our favor. It's essentially, the chart looks okay. This is most likely, let's just take it from the actual run. So if I run this fib on here, we're still in a, it's still a bull flag. I mean, you had some undercut here. And usually what happens there is that you start to lose the possibilities of it actually confirming. And we're starting to see that play out, right? You got a double top on the monthly right here at $18. Let's just call it 18. There's a double top there. So we're going to need to get through that. The good thing is that once we get out of this chop zone, especially this is our our contention here, resistance wise in the volume profile, then maybe we got a shot at it. So, but at the end of the day, at the moment, it hasn't fully confirmed this monthly downtrend. But if it takes this out, takes this level out, then we can say we're in a monthly downtrend. The fibs are still okay. It's been bouncing out of this 50% retracement area multiple times. But this 200-day moving average is now part of the equation as resistance. So that's where it stands on the monthly. Let's just get a better look at the weekly here. Yeah, so I mean, this is the make or break spot, right? Because this will tell us that we've lost our weekly uptrend. Now, technically we have, right? Because it breached that low, but it responded well to it at the moment. And we just need to see how it plays here. So if it holds this and then gets going again, we're going to need to see that 1794 breakout for to be taken out as the resistance for us to see any continuation here. So, but when just like everything else in periods of volatility, you find that you will start to get tightening ranges and equilibriums, and that's what this thing is trying to find. Where does it find it? We don't know yet, right? So that's what we're looking for. We still don't have this full-fledged tightening range. It's still just kind of working its way out. I mean, yeah, you could say, hey, high, low, lower high, higher low, higher high, double bottom. So, I mean, it's tightening, right? But ultimately, what we want to see is we want to see something like this And this is the most likely scenario. Does it happen? Does it work out this way? No, because we know how the uranium sector goes. But you're probably likely scenario is to see something like this. We tighten up and then we make our break. That's hopefully what we're looking at. Could this be something that doesn't happen until spring of next year? Yeah. Could it be something that happens in the next 2 weeks? Don't know. But these are the most likely scenarios. After periods of volatility, we start to run into periods of consolidation, and that's where we are now. Again, these undercut lows, we're going to see them. We can talk about them over and over in a space. It's all the same. These charts, as much as some of them look very different, they all look similar with this undercut low, and that's beginning to be the story. That's beginning to be the story in the space is, do these June undercut lows hold? That's where we're at. Again, this is not a good looking daily consolidation at all. So we're hoping that this holds. And the problem is we have a little bit of a gap down here, and the gap goes down into 1395. So would it be surprising for that to fill? Not necessarily, right? So you could be looking at this gap fill, and it could be problematic. So you just have to see how it plays. Right now, holding of this support pretty good, but we need to get up and out. And even if we get up and out and this type of nature, so let's just say we get a bounce from here and you get a little bit of this, and we want to hope to hold that low. You get another higher high, and you start trending up like this. It's kind of what we're looking to see. Does it happen? I don't know. Um, Low risk entries against this low, yeah, possibility. Um, I'm just accumulating, so I'm going to wait to see how it reacts down here. But certainly, if you think that we're going to get a uranium bounce in the spot price and in the Sprott fund, you could play this as a trader maybe and have a low risk stop out here. But that's traders like to fill gaps. So historically on the RSI, it's a bounce area, right? So it hits these oversold levels and bounces out. But it has a little bit of a different look to it right now, right? It just didn't even get anything out of it. So we'll see how it plays out. These are the technical areas that we're looking at, and we do have a gap fill. So regardless of technical analysis, price action and markets, they tend to get filled. Not always. Some gaps get left behind and never get filled. Um, but that's how it looks with this bad boy right now. So CCJ on the monthly, I've kept this what they call the bullish accumulation cylinder. It's been talked about a lot, and it's starting to get a little bit invalidated because now all these undercuts are fine, right? They got right back in, but now we have an undercut, and now it's being used as resistance. How that plays out from here, I couldn't tell you. But again, we have the 200-day moving average, and we're looking at our supply zone big time right here. So there's a lot of support here in price action. And I've always said from the beginning, right, we have a $20, what was it, 21.76, I believe was that deal price. So you have that 22 fundamental floor, which kind of broke down. Right now we're looking at this technical floor of about $20. Estimations, right? I'm only estimating with my numbers, but you have a lot of tests of this 21 support area that have resulted in bounces. Does it happen again? I don't know. We also have this next pivot. That's a swing pivot, and that's a pretty big zone. That's 18. I don't think I want to see it get down there, personally. Um, but we don't have control of those things. It's your weekly chart, and we'll talk about this zone for a long time until it breaks. Uh, Again, we talk about periods of volatility that come into tightening ranges, and we're getting that tightening range, right? So we need to see how that tightening range plays out. You have your key levels, 2102 right now, 20, whatever you want to call it. I'm calling it, let's just call it for argument's sake, This is the spot where there's been a lot of touches, and that's the spot we got to hold. 2034, 2040, 2030, however you want to look at it. It's just there's multiple touches here. Yeah, there's slight undercuts. You want to call it a $20 technical floor, which I've said ever since that deal came out, right? So the $22 fundamental floor from that deal is now breached. Okay, so all these private placements and everyone that got into that deal at 22, well, they're starting to become people that are underwater, investors that are underwater. So now we have to look at this technical floor and see how that plays out. So $20 truly the number, but let's see how this thing reacts when it gets into the 2040 area. Nothing to say here, right? We had these tightening range and it broke. Everything charts again are going to look very similar, but conceptually, tightening range broke down. Now we look into the next range to see how it reacts at the support areas there. So we have a lot of touches here, and that's how you want to see how it reacts. Patience will be the name of the game in this sector for a while until we see something change. So fundamental news is fantastic, right? It hasn't changed. Everything's great. We hear more and more countries are adapting. Everything is fantastic with the fundamental scenario, but sentiment is horrendous and price action is horrendous. So it rules the day unless you're someone who's just going to say, I'm going to buy Cameco because I know in 5 years it's going to be $50. Well, if you know that and you're confident in it, good on you. I don't have that crystal ball, so I kind of rely on price action. So these ranges are breaking. They're breaking to the downside. Now we need to see how these undercut lows in June how the test is over there. And, broad market's going to dictate that. UUU monthly, just a quick look at the life of it. Not much to say here because, things are just, very different now as far as share structure and whatnot. So, again, your quote unquote bullish accumulation cylinder, in my opinion, it's broken at the moment. You can go back and all these YouTube stars and the insiders and outsiders and whatever you want to call them, they'll talk about how they can show you how the undercuts. Yeah, maybe. So you have an undercut here, but right now this rising support line is now a rising resistance line. It's basically what it turns out to be, right? Support, 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 breaks down, test, 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 breakdown. All right. The range is still the range. UUU, its next UUU, its next test is going to be 539. It's monthly downtrend. There's just no two ways about it. You had your high, you had your low, lower high, and lower low. You're in a monthly downtrend. Lower high is pretty much set here, right? So you have a double top, just like almost everything else in the space on the monthly. You have your double top here, and now we're looking to see where does this resolve. Okay, it's a tightening range, so periods of volatility turn into periods of tightening ranges, and then we look to see how that plays. Same deal. So this bullish accumulation cylinder, quote unquote, is rejected, and now it's being rejected heartily, and that's where we stand. Right. So your key level right now is 539. 469 breaks down, and you could be looking at a bigger drop. We don't know. Something could come out of the woodwork and send it off to the moon, or it could send it down into black dirt breakdown. We never know that. So we deal with the price action and we deal with the charts and what they're showing us, right? So again, we have fundamentals are fantastic. Enthusiasm for the space is fantastic. Countries are adapting nuclear. Fantastic. Price action is telling you something completely different at the moment. But I'll repeat it over and over. Big run ups, periods of volatility, they need to kind of simmer themselves down, establish a decent base, a decent value area, and work from there. So, again, this volume profile, which was really holding us up for a while, is now breaking down. We need to see how this resolves also. Short term, 585. We're at a double bottom right now. So I could sit here and say, oh, a good low risk entry for me is right now, right? And then I could stop out if I don't know, maybe if 578 breaks down or something to that effect, right? But again, these value ranges are breaking down. So it's still in a decent range in the daily. You could look at 539 as your be all end all. I'm looking to see how these June summer these undercut lows how it reacts there. So anything around in this area right now, it's just getting a little precarious. Plenty of chop here to hold us up as support until we start getting down into this lower area. Denison, yeah. So we'll talk about this. I'm not a big triangle guy, but it exists, and I drew this for you guys to see it. Periods of volatility turn into tightening ranges, and this is exactly what has happened with Denison. And you've got a really tight range here, and it broke to the downside. So where does it stop? So historically, purchases in the 90-cent area have been fruitful. So I'm going to be looking to hit this thing in the mid 90s, and I will be out if 90 breaks, and then I'll just revisit my plan after that. So as we can see, a lot of chunkiness, a lot of volume. This is your demand zone, supply zone, whatever you call it. And now here is the problem. Again, with most of the space, it's starting to break down, and it's going to be acting as resistance. So it's got to get through there. Denison's not my favorite. It's a very thick stock. It's tough to trade because it moves so slow. That was the daily. I'm going to take these. Take this off so we can have some clarity. Just wanted you to see that. Here's your weekly chart. Same deal, right? 90 cents. Denison technically is still kind of in its value range, and losing 90 cents just pretty much breaks that down. And you can see it in your volume profile here, right? So we don't want to lose 90 cents. I mean, personally, the way I'm looking at it is I don't want to lose 90 cents. So if 90 breaks down, I'm probably going to be out, and I'm just going to see how it reacts. I'd rather buy it back at $1 if I think everything's ripping and, still have plenty of action here. Monthly downtrend, 90 cents. That's our area. Okay, so that's it for the big boys. Over and out.